Though I love the technology that blockchain allows, I love more that crypto is a place I can invest my funds, and there is the possibilities of incredible returns I've not seen in another industry. There are also savage risks, but with that, savage gains. Now, with savage gains and sometimes savage losses, there is a part of crypto that can add complexity to our lives that we don't really want, but it's part of it. And that is taxes. What if there's a new software that can make the tax easier? Sounds good, right? Now, one of my VC friends from Atesis Capital, one of my favorite VC firms, reached out to me about crypto tax calculator that he also works with, and I liked what he told me about it. So he helped me set up this interview. This is not a sponsored interview. This is so that you can hear about one of the tax solutions out there that makes that dreadful time of the year much easier. Welcome to the Crypto Rain channel. I'm your host, Jay Rain. And if you like money in crypto and you're looking for a seasoned investor take on the crypto market, join the Rainmaker family. You can do that as simply as liking the videos and subscribing. Do know, I'm not a financial advisor. I'm a crypto investor myself. There is a huge difference. I also do own or plan to own a lot of what I talk about on this channel because I don't talk about crypto projects I don't believe in. I screen them out. We do want to thank our Patreon members. We have a private Discord that our Patreon members only get access to. Now make it rain on that like button and strap in for the show. And let's welcome Shane from Crypto Tax Calculator.
Thanks, Jay. Thanks for organizing this.
Yeah, Shane, thank you for coming and joining. Tax software for crypto has gotten better, thank goodness, because I don't know about the audience members, but for the last 4 years, I've run into the problem and I've moved. So you then have to find, or I wanted to find new accounts. You don't have to. But then you tell, as you're interviewing different accounts, you're like, oh, I'm in crypto. And you get this scared look from them. They're like, I don't know what to do. I don't even know if I want to take you on as a client. And, you know, you're kind of like, well, I don't need you to know that much about that. I need you to be good at tax and I'll figure out a solution for this. But then a lot of the solutions didn't work with like MetaMask wallets, right? So some of the solutions last year out there would work with like Binance and some of the other exchanges and can download your stuff. But in the past year and a half, a lot of trades happen on Binance Smart Chain through your MetaMask wallet or on the ETH chain or other things. And they didn't work with those at all. So like last year, I was in this position as I was trying to figure out different gains and losses that it was a total mess because nothing worked with MetaMask at all. And I was like, well, shoot, probably 80% of my stuff from that year had been on through MetaMask in one form or another. And so I was like, you know, doing that manually was the worst. So tell us first, Shane, what got you into crypto before we talk about what got you into crypto tax?
Yeah, crypto. I think back in 2016, I was working on another startup at the time. And in the startup hub that we were working in, had a co-worker, I suppose, who he was working on an Ethereum project back then. It was 2015, so it was pretty early. I had no idea of what Ethereum was. A few of the guys bought into it, including him and a few other people. I didn't. I focused my money on building out the startup that I was working on at the time, which failed. And quite a few people out of that hub were pretty successful out of it, but not myself. They were all kind of made it from the ETH purchases that they made back then, but not their startups. I kind of sat with that for a while with a bit of FOMO watching it. And then at some point I started to, really try to understand this. Like my background is a software engineer. So I wanted to really understand, what is going on here from a smart contract perspective, like what's the point of it? Started an exercise of building out a decentralized exchange, which took a while, about 3 or 4 months. But at one point we actually had it working, and we were trying to build out at this stage something that was regulatory compliant, that would enable kind of like securities for secondary markets for startups, because coming from Australia, there was a lot of issues with getting capital in the startup environment in Australia. But yeah, that whole experience of actually building out the DEX, working in the smart contracts, and actually like there's this problem of like custody when you're building out an exchange, and like who holds the assets and how you're going to handle, party A sends you the assets and party B sends you the assets. You don't want to be the custodian. And I was getting to that stage of the code, and this would usually be like, that's where all the regulation comes in, and that's also like tens of thousands of lines of code. And in the Ethereum network, it's like just like 3 lines pretty much. It's like just a try statement.
It's just a what?
A try statement if you're a programmer.
Yeah.
It's really just like 3 lines, pretty much 3 or 4 lines of code. And it was just unbelievable how much efficiency that unlocks, I think. It's just crazy. And I think that's kind of underappreciated. And that got me pretty bullish on smart contracts in general and just the ETH space. I think the economics behind it is interesting, but particularly just the efficiencies that are driven by some of this technology, and basically being able to outsource the custodianship to the blockchain itself. And then, how that frees you up from a developer perspective to really start working on business logic and innovative financial products, I suppose. So I think the whole space is pretty interesting.
So if I were to summarize, your friends got an ETH. At what price were they buying when they were trying to get you to buy?
Like a sub-dollar. Yeah.
Yep. But in crypto, like, we all have those stories, right? So they're telling you about ETH and you're like, nah, I'm working on this startup. So they make a fortune on their ETH, and your startup ultimately doesn't work out. Though sometimes when the business fails, it's like that education that you paid for that you didn't really want to pay for. You wanted to work out differently. Because every entrepreneur has had failures in their past, and sometimes you learn a ton from those. So you got an amazing learning experience. They got wealthy, and you're like, well, what is this crypto thing? So that must have then really caught your attention in 2016, like probably it was sub $1 in like 2015, 2016, right? So that's when you started paying attention. What got you into, what led you to working on a tax solution to make things simpler?
Yeah, so we're working on that decentralized exchange. We've got basically the SEC equivalent in Australia that we're engaged with, and it was pretty clear that we weren't going to get this off the ground from a regulatory point of view. There was just too much pushback.
Sometimes I'm having a little bit of a hard time hearing you. Is there a way to move the microphone closer or something?
Is that a bit better?
Yes.
So there was a bit of regulatory issues around building out the decentralized exchange, especially at the time there was Ether Delta. And the guy, the founder there, was going through a settlement case. This kind of got me quite nervous about the entire project. So we decided to move away from that. Both me and my co-founder, who's also my brother, we both had tax issues around crypto. We were actually quite into the ICO space. And, coming from startups, I thought it was really interesting to be able to do angel level investments in some of these emerging companies. It just had a whole heap of tax issues. And I really thought that the innovation of the blockchain itself, if we go back to that idea of the settlement layer, a really big part of, what blockchain unlocks is accounting. Like from an accounting perspective, being able to audit things. You can see the importance of that now with cases like FTX, but really having this live accounting record, which is the source of truth. If you think about from a programming perspective, you've got all these different entities in traditional finance who have their own database and their own way of reporting, right? Which is, their own structure. And then you've got to get a third-party auditor like PwC to make sure that they're doing things correct. And you've got an accountant to manually reconcile all these different transactions, et cetera, et cetera. Whereas on the blockchain, you've actually got the same protocol, I suppose, which is the same baseline accounting standard. And as an entity plugs into the blockchain, all the reporting is automated, so to speak, because it's already published on the blockchain. You don't need a third-party auditor to come in because it's already auditable, like publicly visible. And so there's all this kind of efficiencies that get unlocked from an accounting perspective. And accounting is pretty unsexy. It's not like people get super excited by accounting. So I thought from a founder point of view, it was a bit overlooked, the opportunity. And having a crypto tax nightmare of my own, I thought there was an immediate problem that could be solved for.
Yeah, so let me share so you created crypto tax calculator, and essentially this is your summary page. So you want to make it simple. So now here's the question, and for the audience members, feel free to ask some questions. We'll totally get to any questions you guys have, because this is meant to, sometimes the audience will think of questions that I don't think of. That's why I really wanted to do this live, because everyone's kind of facing this, right? And it's in January. Everyone starts thinking about their taxes for this past year and how to account for that. So it's a great time to have this live stream, though I imagine this will get views throughout the year. So walk us through crypto tax calculator, which first let's address what jurisdictions is this helpful in?
Yeah, so we support 23 different countries. The way that we do that is that it really is just a calculator, and it's configurable to each jurisdiction. So when you sign up to the platform, you can select the country, for example, the United States, and we would have default settings that we've worked through, collaboration with a tax lawyer over in the US that we work with, to get those default settings in order. And then you can generate your 8949 statements, your 1040s, your export into TurboTax, etc., etc. So that's all supported for the US. If you're in Canada, for example, then you would have the CRA rules with that, the adjusted cost basis. And so we would handle that inventory method by default. Canada's actually got some very complex inventory methods, which are almost impossible to work out by hand. You really need the right software. Obviously, we'd map everything back to Canadian dollars, and then you can export the CSVs and the reports for your records and use that to input it into the CRA tax forms. Or if you're working with an accountant, you could share this with your accountant so that you're not in a situation where you're paying essentially for all the bookkeeping. You could do that bookkeeping yourself and then really just pass that through to the accountant rather than getting billed $300 an hour for something that you could be doing.
That's the important part, right? Because the solution had been try to find an accountant that's really good with taxes. But number one, there weren't very many. There were some that with tax, I mean crypto taxes, and you'd get some that said they were, but they really weren't. And so you were getting paid billable. You were paying billable hours for their learning curve, which I hate doing. Right? I don't want to pay a lawyer billable hours to learn about, if I have some kind of case, I want to already know that stuff. That's why I'm hiring him, right? I could always learn about it myself. So when an accountant, most don't know what they're doing with taxes. So my question was, are there solutions, or my thought process is, last year I was like, there need to come out better solutions that make it easier so I can figure out so I can go to a regular accountant who's fantastic at the stuff they do, and then I can give them the printouts for what my taxes are so that they can just incorporate that into what they're good at, because that's so much less expensive than finding a crypto tax accountant who might not be good at the other stuff too. So
yeah,
that's my thought process.
That's exactly correct. I think when you think about crypto tax, the reality is most of the tax rules are based off existing legislation. So you really just need a really good tax advisor. And then what you need to do is get all the bookkeeping in order so that it makes sense from an accounting point of view. So we've worked with a lot of accountants to work out, basically be able to translate all the crypto lingo into accountant terminology, rather than trying to communicate to them what pancake swap is and why you were trading some mango late at night.
Because it would take a year to 2 or 3 years for them to get caught up in the inside crypto stuff.
Yeah.
And so essentially you export to a format that they can easily understand.
Exactly. And we work with a lot of generic, I'd say, more your mainstream accountants, like H&R Block, for example, is a service that uses our platform. So
Chris Ashby asks, is the protocol live?
Yeah, correct. So we've actually been building this out since 2018. So it was back before DeFi and NFTs and all that was cool. It was actually deep into the bear market for 2 years there that we were building out this product. We went live with the actual launch back in 2020. Most of our work's been on product itself. There's a lot of things to be done in the Web3 space. But we are backed by Coinbase Ventures and we are live. We've got about 150,000 users at this stage. So I would encourage you to try it out.
I do have an affiliate link below. You don't have to use that. It doesn't cost you any money to use it. It doesn't save you any money if you use it. It does benefit the channel. Feel free, if you want to support the channel, to use that, or you can go to cryptotaxcalculator.io directly and check it out for yourself and see if like it's right for you. I know this is fresh on everyone's minds. A lot of the groups I'm in, they're all talking about tax questions, right? And they're asking all these tax questions. And I don't know about the audience members. I hate to get into the tax side. I don't like the discussions about it, anything. I realize it's something we have to take care of. You know, it's an obligation that, you know, we need roads and we need military defense and other things. So, and I get that. I don't like spending any more time on it than I need to. And so I'm always looking for solutions that make it easier for me and more cost effective.
Yeah, definitely. I think even particularly in Canada, there's quite a few things there which can catch you off guard from a tax perspective. But globally around the world, there's just a lot of gray area in terms of how to handle some of the complexity. For example, a common one is adding liquidity to a liquidity pool and what the tax implications of that is. You know, depending on who you talk to, really, some people will suggest that that's a disposal for tax purposes, and other people will suggest that that's actually just a deposit for tax purposes. And there's pretty good arguments either side. And the reality is you could probably bring up case law, depending on your jurisdiction, that supports either side, because that's just the nature of law. That's just how it works. And what you really need is clarity from the courts, but that's not going to happen probably anytime soon. So you have to take a position. And so that's really where working with your accountant becomes useful, is not so much the bookkeeping side of things, but thinking about the tax from an advisory point of view and getting appropriate, I guess, documentation as to why you have made those decisions. And then you can use a service like Crypto Tax Calculator, where you can actually configure in the platform, okay, look, I want to treat adding liquidity as, you know, a disposal for tax purposes or a deposit for tax purposes. You can actually define those rules depending on your individual circumstances.
Yeah. So you guys, how long has your product been live for people to use?
We've been live for 3 years now, actually. We started getting our first customers in 2019. Okay,
nice. So this is your 3rd year, which that was pretty advanced. Like last year, I see part of it is like, it's just kind of like talking to people and looking for solutions. Last year, I couldn't even find a single solution that worked with even MetaMask, right? Much less Ether Delta. A lot of the audience hasn't been around since they don't know what Ether Delta is, but Ether Delta was essentially the first DEX. It was much more complex than it was a real pain to try to trade on it, but allowed you to swap things on Ethereum before there was any other way to do that in an easy way. MetaMask wasn't around. You were using like My Ether wallet and then connecting it to things like Ether Delta. So, yeah, I had to manually go through and account for a bunch of things from that stuff. And I was looking for a solution. So as I was talking to Matthew from Antisa's Capital, and we were talking about it, and he was like, oh, yeah, it totally integrates with the DEXs out there and like the different decentralized wallets. And I was like, oh, my gosh, yes, that's what we've been looking for. So now with that said, like, how does it work if people are interested, they want to find out more about Crypto Tax Calculator? Because for this show, I just kind of want to give people some information on what it is, how it might work, what it can solve, or what parts of things can it handle for them and what it can't.
Yeah, definitely. I think big question we get is what's actually different about this compared to competitive products. So we've been around since 2018, but really we were in beta mode until about 2020, like early 2021, and then we got funding from Coinbase the second half of 2021. During that process, you know, we've been really focused on actually solving for Web3. A lot of the other players out there, you know, they work well with centralized exchanges, but then when you actually start to deal with the complexity of trading out of your MetaMask wallet and all the kind of interesting transactions that you could do, they really start to break down. So that's what we concentrate on. the data that we deal with on the blockchain can be very noisy sometimes. So the other thing that we've got there is the reconciliation engine. And really what that is, if you're not familiar with the wording reconciliation in accounting terms, it's essentially just a series of suggestions that we provide so that you can get to an accurate outcome. So there might be gaps in the data because, for example, the centralized exchange isn't providing all the history, or there might be some missing market price issues or something like this. And we'll actually try to raise those concerns and kind of guide you through the correct process to kind of speed up the reconciliation so you can get to an accurate report. From my knowledge, there isn't any other platform with an actual proper reconciliation engine with smart suggestions.
So for reconciliation, it might be like, say they participated in an IDO and they sent in 2 ETH at the time, and then all of a sudden 3 months later, they get 10% of their tokens. Well, it's not really going to recognize necessarily that maybe that came from a different wallet, so it won't know what the cost basis is. So essentially it will ask you, what'd you pay for these tokens? We see how you got 10% here, 10% here, and we can look and see what you sold any of those for, but we can't see what you bought them for. So then you just input what essentially you paid for them, and bam, it figures out the rest of any of those other tokens you then claim, and it knows what you paid for them, and it can then figure out, okay, what are your gains?
Yeah, correct. And you've got there's steps that you can do. If you're a crypto accountant, and we've worked with quite a few of them, they've basically got a process in place to try to speed up the reconciliation. And what we've done is transfer that process into the app itself. So you don't have to be an expert who's reconciled 200 or 300 different clients' accounts. You can actually just follow this process and you're guided through the best practices that these crypto accounts actually use.
So it sounds like a bunch of accountants are using your software too, right? That they're like, okay, I don't know how to do all this stuff, but let me get the software.
Yeah, that's exactly right. We've got, I don't know the exact number. It might be about 1,200 different accountants using the platform now as well. So yeah, there's a lot of them floating.
That's smart, because then that extends their ability to work with people on the crypto side without having to know everything and just understand what are the hiccups or what kind of things they need to input for reconciliation. It sounds like you kind of built it to help them walk through that and make that part simpler anyway.
Yeah, that's exactly right. I think a lot of other platforms, you just import a CSV or you connect the wallet. There might be a lot of issues. You don't know where to start with those issues. You've got really no confidence in the accuracy of the results. And the thing is, like one of our advisors, he used to work for a tax authority as an auditor. So he'd sit on the other side and say, audit you, Jay, and be like, okay, well, let's see what your records are and pick them apart and try to look for gaps. The first thing they'll do is, do the numbers add up? And for a lot of these platforms, actually, when you import the transactions, the numbers don't add up. Whereas for us, you import the transactions, if the numbers don't add up, we'll first of all warn you about it, and then we'll give you some steps and solutions to actually go through and fix this up. So that way, if you get audited at some point in time, hopefully you don't, but if you do, you don't have these big gaping holes in your data. That will lead to a lot more questions. You'll instead have these accurate records, and basically they'll look at that and pass to the next person because you've got everything in order.
Makes sense. Cool. Let's see. Any other what questions you have in the audience? Justin was saying ETH gas fees are absurd. They were especially absurd. Like March of 2021, I once paid I think $750 to speed up a transaction to make it happen instantaneously rather than slowly for $400.
Yeah, I remember trying to get into the Brave token ICO and the gas. What was it? I think somebody paid $75,000 in gas fees or something.
Oh my gosh.
Yeah, it's brutal.
Man, I hope ETH, as they continue to roll out ETH 2.0 in stages, can permanently fix that. If not, they will make themselves obsolete because that was some major headaches.
Yeah, it's pretty interesting from a tax perspective as well with the gas fees. For example, if you bought ETH if you were lucky enough to buy ETH at say $1, and now that ETH is say worth $1,000, and you spend 0.5 ETH on gas fees and a gas wall to try to get into an ICO, so that's $500 disposal from a tax perspective, and you've actually made $499 in gains on that fee. But then you still want to apply that cost basis of the fee, like the total value of the fee as cost basis for the future transactions. So there's heaps of really intricate calculations, because really, in a transaction on Web3, you've got 3 different currencies potentially. You've got the incoming currency, the outgoing currency, plus the fee currency. Mm-hmm. And so it's quite complex scenarios that you can get yourself into. It's pretty important to try to use software to work it out, essentially.
What is cool is the transparency of the blockchain, right? So figuring out, having the solutions take care of all that, like I knew that was all coming, which is great, but the transparency in most cases really, really cool. In a few cases, it's like the transparency kind of sucks, because like, what if, you're 22 and you have a Pornhub account and you don't necessarily want your mom to know about it, but, she figures out how to check things on the internet and figures out, oh my gosh, so there is some privacy aspects that cryptocurrency or blockchain doesn't maintain. So that part is kind of a downside of it, but the good side of it is, like, even with this FTX stuff and some possible fraud here, the blockchain is such an amazing thing because they're able to piece back where all these transactions came from and went, right? So on that aspect, the ability, because these records in many cases are immutable and they're going to be there, you can piece together these things, right? So
yeah, it can be good and bad. I think for anyone trying to avoid paying taxes, the fact that everything is immutable on the blockchain and isn't going away anytime soon is fairly advantageous to tax officers who are trying to track down people who aren't actually paying their taxes. Even if they're not doing it today, the records are just there for tomorrow, so to speak.
Justin says, get your tornado cash. Yeah. That's why the regulators are going after that, because yes, it is one way people have hidden funds, right? Just know that, like, on the blockchain for now, most likely, like, you're going to have to pay your taxes on it sooner or later, because they will figure it out, right? The regulators will figure it out. So it's like, hey, if you're actually trading for longer periods of time, like over a year, in a lot of jurisdictions that falls into long-term capital gains. In most jurisdictions, long-term capital gains rates is like pretty good, right? Like, the government still does need to fund itself. So like if it's 20% or below, like, in my opinion, that's totally fair. And, we get the benefit of the protection of not having neighboring villages come and attack us and cut our arms off because they had a bad day and they want to take it out on someone. So, I mean, this cost of freedom in some ways, I'm okay with 20% or less all day long. More than that, I start to get really concerned. So it's like, long-term capital gains falls in that category. I'm cool with that. Chris Aspie asked another good question. What are the fees for using the protocol?
Yeah, so it's actually it's a web application. We support many different protocols on the web app. It ranges from $99 for up to 1,000 transactions to $499 to 100,000 transactions. We've actually got a free tier, so up to 1,000 transactions is free if you've got less than 3 integrations. So depending on how many different wallets, etc., that might apply to you, but you could definitely get started for free, start importing the transactions. You can actually go through and do pretty much absolutely everything in the platform to make sure that everything's reconciled and you've got pretty accurate numbers when you're looking at the transaction history, all for free without actually paying for anything. It's only when you go to generate the final reports and get the final figures that we, put a paywall on there and ask you to pay. Obviously, we need to fund ourselves. So, but apart from that, you can actually, like, from a risk perspective, you can get in there, start inputting your data. Obviously, only public wallet address is all we ask for. So it's, there's no loss of identification or anything like that. And so you could go through and get everything sorted, get really confident with the application and de-risk, and then go and make that purchase to get those final numbers.
Cool. Makes sense. Well, that's the questions I had prepared. Any other things that you want to share with the audience about it? Any final thoughts?
Just that, yeah, it is tax season for a lot of jurisdictions at this point in time. I think, it's we've been in the market for a while, and a lot of people out there, they can kind of hesitate about doing their taxes. It can seem too hard. They kind of postpone it. It's, a weight on their shoulders, and it builds over time. And, they might have done, I guess, a partial return where they've declared just one centralized exchange or something like this as well. We see that quite a bit. You might just claim your Coinbase activity, but ignore the stuff that's going on in your MetaMask wallet. And that's not really the right way to approach it either. The fact of the matter is that, everything is on the blockchain. The tax office does have access to this data, and they will be able to see holes in the data, et cetera, like these accounting principles, they're in place to make sure things add up, and there's checks and balances that they use to make sure that it's accurate. So it's important to focus on accuracy, but also just start doing it as well, and not get caught in the state of inertia, but like just get the ball going and start working through it, because I think that inertia point is the thing you just need to push past. But once you get into it, it often doesn't take as long as what you think. It's not actually as painful as what you might be thinking it would be. And the benefits are that you can actually have a full understanding of your portfolio. It's almost like a trading diary. You can see what the successful trades were, etc. And you can do a lot of tax planning as well. Realize losses, really offset gains, and just minimize your taxes. We see a lot of situations where people do a whole bunch of activity, and they could have done some tax planning to dramatically reduce their tax bill. But we've seen cases where, for example, clients have earned, 100 grand in staking rewards. It's getting classified as ordinary income in their jurisdiction. It's gone to zero. They can't offset it with capital losses, and they actually have more taxes than what they've got in assets, and all types of nightmare scenarios that we see. So it's really like you need to be doing the tax planning, and just once you get it up to scratch, then it's a lot easier to maintain.
So it's like they can get started on it for free, and they're only going to pay when they generate the reports, and it's something that you can kind of maintain during the year as well, right? So they could use it to file for last year's taxes, but then they could actually just keep it and have a check on it and see how things are getting categorized, so they can check in once in a while for this year and see how things are going, almost like an efficiency, almost like a profit and loss. They can look at it during the year. Is that what you're saying? And you only get charged later when you're generating the reports that you need. Am I understanding that correctly?
Yeah, absolutely. You've got the profit and loss statements from each single transaction. You can see how it's been calculated, what's been the most successful trades, etc. Also, you've got everything in the one portfolio now. I know, you try to use these portfolio tracking apps, and it's always a nightmare trying to set them up because you've got to plug in all your different wallets, etc. In this system, once you've got everything, you can have everything in just one place. You've got all your reports generated. You can understand, what trends are going on with your portfolio. So, there's a lot of benefits once you get there. It's just, accounting isn't something to be scared of. I think everyone here, most of the time is in it to try to make some money, and accounting's meant to help with that, essentially. Because you care about the net profit, not the gross profit at the end of the day.
Good point. Chris Aspie asked another question. How do you work with centralized exchanges?
Yeah, so with centralized exchanges, you can connect via an API. So you can log in with Coinbase, for example, or if you're on Binance, for example, you can generate your API keys. They're read only, and then you plug that into the app. Or you can export a CSV, and we also directly support those CSVs. So you don't have to do any manual manipulation, importantly, which can be a bit of a nightmare if you have to tweak the CSV itself. With our app, you don't have to touch it. We actually don't want you to touch it, because sometimes that can change the format. Instead, you just drag and drop it into the app, and we'll pass the data on your behalf.
Cool. That's all the questions I had. If there's not any more questions from the audience, then well, thank you for your time. We'll give it just a second. Shane, we appreciate you joining us.
Thanks so much, Trey. Really, really appreciate the opportunity to talk to your audience.
Yeah, I like Coinbase as a company generally. Sometimes people are like, I hate Coinbase and their fees. Their fees are what they are. I use Coinbase a lot. And I've also followed some of the stuff that they invested in, right? So their Coinbase Ventures is also a good investment arm of theirs that I tend to follow what they invest in, and that's actually benefited me a lot. All right, looks like no further questions. Shane, very much appreciate your time today. So cryptotaxcalculator.io, there is a link below if you want to use that, an affiliate link. So thanks, everyone. Thank you, Shane. We appreciate it.
Thanks, Jay. Talk to you soon.
All right. Yes, the bear market is here and crypto is slow right now. Just know that good decisions you make during these pullbacks can lead to life-changing ones when the market turns around. I did want to talk about taxes. People often ask me about it. I'm not an accountant, and so I wanted to bring on what I find is a good solution, or what I think is a great solution, and bring it on in this format so that you could ask some questions and get a feel for if it's right for you or not. Do you know that when you make, like, this is the best time to be around? And I know a lot of people in the crypto space has left because that's what happens every crypto winter. But a lot of my friends that stuck around during the last crypto winter and they made some solid investments during that time, they all became multimillionaires when the momentum came back in the market and everything went crazy. So I like to think you're in the best place you could be. This wrap is for all of you to reinforce the principles that I share. Really, I wrote the words to this, but I had somebody who's a talented rapper out of the UK perform it. Hope you enjoy.
Came into the space chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, you buy before you could. Was told to buy when it was pouring like a rainmaker should. I buy when it's down, don't chase the boats that I miss. Cause I always make the time in mind. I take the one out cause I'm patient like that. And I'll wait for the right time. I sell when it's high, I buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't leave with my heart. The principles are simple, they're leaving a mark. Buy when it's boring, just gotta be smart. I sell when it's hype, like all the channels they pump it. That's when I was selling, go parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck. Time is never better, the time like the present. The next 5 years is a gift and it's feeling like heaven. I'm committed to learn, studying to know that nothing comes easy, but with knowledge the game show. Sticking out this wrong, cause soon will come a bear market. Learning and growing, and when it's slow will be the target. They say it's come out, Bitcoin is dead. The massive decreases can get to your head. Sticking around, the time is better. I'm strong like that, I'll let the others be fretters. 2 years time, the ball will bring back the gains. That makes it worth the effort, cause here comes the rain. So let's go rainmakers, let's make it all happen. Let go of the hate, say the haters be crafting. I'm here for 5 years, let's do this together. The time is right, the time could be better. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck. Haters be hating, the time to slow down. Addressing what they say when I'm wearing my crown. They're chasing green candles like someone who was new. I got a vision that was bigger, helping me to push through. I'm still human and sometimes it is rough, and that's what makes me special, simply I stay tough. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck.